Welcome back to today's morning report. Charter Pros on Thursday, the 8th of September, with me, Rich Market Analyst at Handset Markets. Moving on to sterling dollar, and we had a fairly sizable correction yesterday on sterling dollar, and it sort of reiterates what I was saying, that I think that the market is sort of moving into this sort of ranging phase really on cable, and I think that it sort of suggests that the bulls are a little bit shy from breaking out. I think that resistance comes in at 34.80. From those July highs, and then 35.35 from the sort of late June pickup. But 34.45 was yesterday's peak, or sorry, should say Tuesday's peak, before sort of turning lower and then just dropped back about 100 pips. It's picked up slightly today on the back of the dollar weakness that we've seen, but generally speaking, I'd say that these indicators on this chart are sort of more range bound, really, aren't they? I mean, you look at this on the fact that sterling tends to not be able to get too much traction above 60 on the RSI, and again it's turned lower from 64, 63, 64. MACD lines are unwound to neutral, and the stochastics are just again rolling over. They have actually crossed over now, and you don't get too many of these crossovers. And when they do, when you do see them, if I actually put the crosshair on them, you do tend to see the market pulling lower in response. So it could well be that we're about to get a little bit of a corrective move, and that sort of reiterates that sort of range play that I believe that we're in now on cable. So what we've seen in the last sort of day or so is this uptrend broken. This is the hourly chart. The uptrend has been broken, and it's sort of, just because an uptrend breaks, it doesn't necessarily mean we're going to get a sharp correction. It just means that potentially we're going to see more of a ranging phase or a consolidation phase, sideways trading move. And that, I think, is what we're seeing at the moment. Now, the resistance, I think, that the support that needs to hold is 31.15. That 31.15 level was yesterday's low. If you start to sort of break that down, I think we're going to pull back to a test of 32.50, which is this level here. If I can get my crosshair on it and you can see it properly, 32.50 is that level. It's sort of a breakout level, but subsequently became supportive, and that I think is important. But if you lose, as I said, 33.15, then we could see that level tested. But you look at these hourly momentum indicators, they're far more either sort of, you could argue, negatively configurated, or even possibly, well, at the very best, neutral anyway. So they're certainly not positively configured anyway. The RSI sort of dropped below that sort of mid-40s area yesterday, which had been sort of supporting throughout the uptrend, and that is a level that's becoming almost resistant. So around 50 on the hourly RSI is interesting. Also, the MACD lines, having fallen below neutral, not really shooting the lights out to get back above it, are they? So it's sort of more of a consolidation trade at the moment, if not a corrective one. So the corrective one would come, I think, on a move back below 33.15, which would then open 32.50. If 32.50 were to be broken, then that, I think, really sort of pulls you back into this sort of 30.60 to 31.60 sort of area of sort of below. It's a minor pivot line anyway, 31.16, so 31.60. So I think that's what we're seeing on cable at the moment. I think that this range phase is sort of kicking in once again, and I think we could start to see at the best a sort of sideways consolidation, but if the momentum gets behind a correction, then possibly even a downside move. But for now, it's looking fairly sort of neutralish to slightly sort of sterling positive today on the back of that dollar weakness. But it'd be very interesting to see if sterling can hold up, because it looks a little bit more corrective now. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.